Fed July meeting minutes indicate that officials believe additional tightening may be required to bring down persistent inflation. Major indices correct for the second straight day, with the Nasdaq the worst hit, closing over 1% lower. Stocks in the Asia-Pacific start on the back foot following weak cues from Wall Street. The GIFT Nifty is also indicating a lower start for the Indian market. Crude prices correct. Brent falls to about $83 a barrel as concerns over the health of the Chinese economy outweigh a large drawdown in U.S. crude inventories. The promoters of Adani Power sell just over 8% stake to GQG Partners. Promoters mop up nearly 9,000 crore rupee through open market sale of nearly 15 crore shares. GQG also picks up a near 3% stake in JSW Energy worth 760 crore. In another large trade, the Burman family has picked up a 5% stake in Religare. Monsoon fury claims over 80 lives across Himachal Pradesh and Uttarakhand in the last 3 days due to heavy rains and landslides. The Indian Air Force rescues over 700 people stranded in Himachal's Kangra region, while Chief Minister Sukhvinder Singh Sukhu says the state has suffered damages worth 10,000 crore rupees so far. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Well, it's a Thursday morning and we do have a lot of cues again coming in from the US markets. They ended lower and that's something that had an impact on the Asian markets as well. So first up, let's take a look at what the Asian markets are doing. The negative cues that they got from the US markets are getting reflected here as well. There's a big cut in the Hang Seng market. That one is down around 1.7%. Nikkei is down 1%. And we do have the likes of Kospi, Straits Times, Taiwanese Index, all of them down anywhere between 1 to 2% as we speak. The Chinese economy, that is something which is under a lot of pressure and that continues to worry the markets as well. And on the back of that, crude prices have fallen as well. We'll discuss that in greater detail. But GIFT Nifty, that is the one which is indicating that the start could be in the red, 70 points lower here. That's what the implied open is suggesting if we compare GIFT Nifty to Nifty futures. Moving on now to the big story from Wall Street. Federal Reserve's July meeting minutes show officials are concerned about the pace of inflation and said more rate hikes would be necessary in the future unless conditions change. CNBC's Steve Leisman gets us a report.
The minutes from the Fed's most recent meeting show that the most of the participants in the meeting still saw significant upside risk to inflation that could require further tightening. So at least in that one statement there, a pretty hawkish outlook there from the Federal Reserve. But hold on before you make your immediate trades, because these minutes are a mishmash of different points of view. Some of the top line comments, some saw downside risk to the economy and upside risk to unemployment. So that kind of sort of works against that, but it's a smaller number than the most who were concerned about the upside risk. A number said risks were two-sided. And we learned for the first time in these minutes that a couple participants, apparently not voters, just people who were at the table there among the bank presidents, wanted to keep the rates unchanged. So they were not in favor of, they were not voters apparently, or if they were, they didn't vote. They didn't vote what they said their concern was, wanting to keep rates unchanged. Now, I'm going to give you some positive comments, and I'm going to offset those with negative or hawkish comments. On the positive, dovish side, some saw tentative signs inflation could be abating, including softening core goods prices. There were continuing signs of supply and demand in labor coming into better balance. Tighter financial conditions were expected to slow consumption, and a gradual slowing appeared to be in progress in the economy. That was back when they met in July. However, that has not been the case. So here are some of the negative hawkish comments that were there. They said real GDP had demonstrated resilience. That's been the case over the intermediate period here, and the economy showing considerable momentum. Again, that's been the case. This group saw payroll and wage growth as still high, and several said significant disinflation had to become apparent in core services ex-housing for the Fed to relax on the idea of raising rates in the future. There was a high degree of uncertainty over the effects of past hikes.
Okay, that is an important update and did impact markets in overnight trading session. In fact, let's get you some important opinion coming in from former Fed Vice Chairman Richard Clarda and former Federal Reserve Governor Randy Kroszner on the road ahead for inflation, the Fed's policy trajectory, and what can the market expect from Fed Chair Jerome Powell in Jackson Hole next week.
Well, I do think the Powell Fed is data dependent right now, but I've also thought, and after reading the minutes today, continue to think that the risks are that we do get in one more hike this fall. You know, at the June meeting, the SEP dots indicated that most folks thought that a July hike and one more would be required, and I'm leaning in that direction now. You know, they could get data that are sufficiently positive for them that they could be done. But these minutes read like a committee that is worried not just about the baseline, but about the risk. And as your quote indicated, the risk are to the upside on inflation.
Remember last year he ripped up the script and he gave a much shorter speech and said the same thing 8 times, inflation is our priority. And so in some sense, he's not going to take a victory lap, but they've made a lot of progress. Inflation has come down a lot. They've raised interest rates quite a bit. And I think he's going to talk about how inflation is starting to come down, but that the Fed needs to continue to remain vigilant. They don't want to give any signal that they're going to be cutting anytime soon, and they're not going to be cutting anytime soon.
Okay, that's some expert opinion coming in. In fact, stocks on Wall Street fell for the second straight day following the release of the Fed minutes. The Dow Jones fell 180 points, the S&P down 33 points, and the Nasdaq Composite, the day's underperformer, closing with losses of over 1%. So that's what happened there. But let's stay with Wall Street action and get you some important opinion coming in from Mona Mahajan of Edward Jones and Liz Ann Saunders of Charles Schwab. Listen in.
Generally speaking, we would expect, after such a strong run, some period of consolidation, some profit taking, and we think some caution is probably prudent here as we're heading into, of course, August and September, which are notoriously volatile months. But that being said, you know, as we think about the underpinnings, the fundamentals of the market, a lot of it is still intact. You know, markets have priced in better inflation trends, maybe a Fed that can ultimately step to the sidelines, and of course, an economy that is holding up much better than expected. And when we look to 2024, we would expect the earnings picture to reflect that. And over time, the Fed has even told us they'd like to gradually move back towards a more neutral level. So rate cuts may be on the horizon as well. So that's not a bad backdrop over the next 12 months, but we'd be a little bit more cautious in the near term.
You're not yet seeing the kind of defensive leadership that you might see when you're getting toward the end of a consolidation period. It doesn't feel like, absent a catalyst, that this is going to unwind in spectacular fashion, but it feels like there's probably a bit more consolidation to go. What I wouldn't mind seeing is a continued profit taking, maybe up the cap spectrum into those prior high flyers, while you start to see improving breadth in other areas of the market. Not quite seeing that yet, but that would be one of the things I'm looking for to show a sign that maybe we're getting through this pullback, correction, consolidation period, whatever you want to call it.
Okay, that is some expert opinion, but time for a short break now. When we return, we'll tell you how these overnight cues will impact our own markets in our Power Prep segment. Stay tuned. Welcome back. Well, we'll now get to our Power Prep segment. We have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you first up. Looks like another weekday for our own markets.
Well, you're absolutely right. Good morning. Yesterday, while we started off on a very weak footing, story actually was the fact that we managed to see a significant recovery in the second half of the trading session. And, today also will be important to see whether we can manage to do that. But while, like you mentioned, the overnight setup, the trade setup actually looks quite muted given the fact that, overnight Wall Street cues have been quite negative. The FOMC minutes have actually indicated that, further rate hikes are not ruled out as of yet. And on the back of that, you did see some selling pressure, emerge across US markets, especially. Crude oil prices too, fortunately have seen continuous decline, third trade session of losses in yesterday's trading session, and WTI futures now below the $80 a barrel mark. Now, talking about the Indian markets, yesterday we did mention that, we saw strong recovery in the second half. However, banks continue to underperform. Along with that, the metal pack yesterday on the back of a much stronger dollar actually saw some significant weakness. Good part was the broader end of the markets continued to outperform, with both mid-cap and small-cap significantly outperforming. And the broader end of the markets actually saw very good advanced decline ratio as well. Now, today morning, Asian markets are starting off on a weak footing, and the GIFT Nifty 2 is indicating a muted start for our own markets.
Okay, all right. Thank you so much for that, Vivek. Now over to Abhishek, who will list out all the stocks that will be in focus today.
Well, to begin with, Nava, the company has suspended production in their Odisha plant due to damage in the raw material handling system. So they have an insurance over there. However, it will take 2 months before the resumption on production happens. Power Grid, they have successfully commissioned the project assets under Northeastern Region Strengthening Scheme 6, for which, notification for commercial operations have been received by them. Railway Minister says that Cabinet has approved 7 multi-tracking projects worth about 32,500 crores. So RVNL and IRCON is in focus. Now, sources on EVs do say that government aims to accelerate adoption of EVs via battery swapping, which will be a better choice to consumer. So Tata Motors, M&M, etc. could be in focus in trade today. In terms of block deal, Adani Power block deal promoter sold about 31.1 crore shares. GQG fund has bought about 15.2 crore shares. JSW Energy block deal promoter has sold about 2.1 crore shares, of which 1 crore shares have been bought by GQG funds. Aurobindo Pharma, they have launched HIV triple combination product for children living with HIV. This to launch the product in low and middle income countries under voluntary license from VIIV Healthcare. Cipla, they have an FDA, Konkan division suspends the FDA license of their Patalgana plant manufacturing unit for 10 days in December. Alembic Pharma, BSE has written the company's draft scheme of reorganization of general reserves between the company and the shareholders. Back to you.
Okay, those are some stocks which are on our radar today. Let me go across to Mangalam now, joining with all the cues from the F&O space. Hey, Mangalam.
Good morning. So you guys have been pointing out that the GIFT Nifty is indicating a gap down. That may not necessarily be a bad thing if the last few days is something to go by, because if you just take a look at August 14th, from the lows, and yesterday as well from the lows, the Nifty has seen stellar recoveries. Both the last 2 trading sessions, anywhere between 150 to 175 points as a recovery from the low. So that what it does is basically establishes strong support at the lower level. In fact, for the Nifty, the 50-day moving average, support between 19,250 to 19,300, and the Nifty Bank, it would be the 100-day moving average, which is 43,600. Those are important lines to watch out for on the lower side. However, for the markets to move higher, just the way they did yesterday, we need a couple of things to pan out. One, the FIs have to buy, as they did yesterday, close to around 3,100 crores in terms of institutional buying. And secondly, there has to be a lot more short covering, because despite the FIs buying about 221 crores in index futures yesterday, their long exposure is still at 39% itself. There is weekly options expiry today, so the second half will be extremely crucial. In that, the FIs have sold equal number of calls and puts, telling you that the option writers are positioned themselves for a bit of a range itself. 19,400, that is the fulcrum where we've seen both call and put writers extremely active. The 19,400 call has about 73 lakh shares in open interest, as does the 19,400 put, close to around 1.4 crore shares. For a combined premium of 100 rupees, option writers are positioning themselves for a range of 19,300 at the lower level and 19,500 at the upper level. As we can see from the 19,450 call as well, there is, however, some punt buying at the 19,600 call for a premium of 6.5 rupees. What does this mean? That the option writers, the range that they're playing for is 19,300 to 19,500. But if we sustain above 19,500 for a longer period of time, sharp short covering is possible all the way up to the 20-day moving average of 19,629. Just a couple of stocks on our radar. Just watch out for Hindustan Copper. After a big decline yesterday and getting out of F&O ban, it's re-entered F&O ban. And a lot of short covering is what we've seen on Infosys.
Okay, all right. Thank you, Mangalam, Abhishek and Vivek for joining us and prepping us up for this trading day ahead. With that, we'll slip into a break. Up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. Well, a lot is happening in the commodity market, especially on the crude side. Manisha Gupta is joining us with all the updates. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. Well, we have seen the crude oil prices decline for a fourth straight day today, and we're trading at a two-week lows right now, and we have broken below $80 a barrel as well, a level that the crude prices were holding for most part of last couple of months. But the dollar index now is trading at a six-week highs. The Fed policy minutes signal more rate hikes on table, and the U.S. Inventories may have declined, but the U.S. production continues to rise, and that's weighing on to the prices. What also has seen a decline is the metal sector as a whole. So whether it's about precious metals or base metals continues to be under pressure. Gold is now trading below $1,900 an ounce. It's a 5-month lows for that. And we also are looking at zinc at 2.5-month lows, copper at 7-week lows. So almost everything within the commodity sector as of now trading in the negative.
Okay, all right. So some bearish cues coming in from the commodity markets. Thank you, Manisha, for joining us with that analysis. Let's stay with the commodity space and get you some important opinion on the crude oil price trajectory going forward, coming in from Amrita Sen of Energy Aspects. Listen in.
what he has been saying throughout, and OPEC Plus members, is that they wanted to bring some stability to the market to ensure that inventories don't keep building. And if anything, we have been expecting big stock draws in the market over the summer, and the Saudi cuts and OPEC Plus cuts have definitely helped accelerate that. We've also been through a huge period of destocking because of high interest rates, as we were probably one of the first to highlight this at the start of the year. And I think we are now, it does look like we are pretty much through that cycle. So I think oil will remain supported. There's a little bit of profit taking right now. It's also the summer lull, so people are off on holiday, which is, again, to be expected. But I do expect prices to grind higher towards 90 after this round of profit taking is over.
Okay, China concerns are spooking crude oil prices. The prices at a 2-week low, and that's the case that we are seeing with the Asian markets as well. The depression or the impact on Chinese economy is something that is impacting the Asian markets across the board, and the weak handover from Wall Street also didn't help. So we have the Hang Seng, which is sitting with cuts of 1.5%. Of course, it has recovered some of the losses that we saw early morning. Taiwanese index too, it was down around 0.3%, now is down 0.2%. But still, across the Asian markets, we are seeing some red, and the gift Nifty, the implied open, is suggesting a downtick of 67 points, but we'll have to see whether we see recovery after a gap down open or not. With that, let's move on to the latest weather updates now. As heavy rains continue to batter Himachal Pradesh, at least 71 people have lost their lives over the week and 13 are still missing. The heavy downpour had also led to landslides and flash floods in several regions, including Mandi and Shimla. The Indian Air Force, NDRF and Army are currently engaged in the rescue operations. So far, more than 1,000 people have already been rescued from the low-lying areas. The government has also declared holiday for all educational institutions in Shimla. 10 people in Uttarakhand have also lost their lives following heavy rain and landslides. Okay, this is an important story. We'll keep getting you updates on this one. And that's all we have on Power Breakfast. Stay tuned. Pasar Morning Call comes up next.